Vito, I got to rip up the script here and go to the Google follies. The size, the mass that so many predicted for technology. I'll give a hat tip to Michael Mauboussin on that as well. Has tech in America gotten too big?
I don't think so. I think there's obviously the larger players, like in any space, are getting the headlines, but there's such a vibrant community below that in terms of the players that are developing new technologies. What's interesting, though, is if you look at some of the technologies that have just come to the forefront during this pandemic and how quickly those valuations have jumped. So it's becoming, as an overall sector, it's still a important driver.
Can you help us? And I know you go back to Fortran cards and the little punches and the chads in the card and all that. But Vito, can you help me with what we've heard from Eric Schmidt and others, that if there is fair choice, it's not monopoly? Do you buy that?
I think the statistics, certainly when you look at the size of the search market as an example, and you look at what Google represents, they've obviously got the better mousetrap. And I think they've driven a larger amount of volume through their search engine. And certainly it's built as an algorithm that the more that goes through it, the better it is. And so we've all become commonly used to it. You need to open it up and make sure that it's an even playing field in terms of competition. But it's an easy target, I would say, right now, especially for both sides of the aisle in a time like this as we're heading, we're 11 days from an election. It's an easy headline to make.
What's interesting is that the more attention goes on big tech, the less attention goes on big banks. And there's this idea that actually consolidation will be welcome among the financial sector. The rumor right now is that Wells Fargo is looking to sell its asset management arm, that perhaps some rumored buyers could be a Bank of America-like suitor. This follows the Morgan Stanley purchase of Eaton Vance. Is this an opportune time for banks to consolidate, to get bigger, with the attention all on tech?
Well, I would say that we've looked very closely at what sectors we expect to be players in the M&A market as we're coming out of the pandemic. If you go back to the financial crisis, we saw a lot of the financial institutions who were probably in a bit more distress combine at that point. We're seeing Morgan Stanley obviously build up their wealth management business, as you mentioned, with the Eaton Vance transaction, and certainly others that maybe are struggling a little more, trying to shape their portfolios. But I think the banks are in a much stronger position today than they were 12 years ago. And as a result, they're positioned to do some transactions. But I actually expect a lot of the volume from an M&A perspective to be more in, say, the tech and healthcare spaces. And then we've just seen this massive resurgence in energy, which we've been expecting for some time with a number of deals announced this past week.
Well, to Tom's point, though, on tech, and you're saying that there's going to be a lot of activity here, there is this growing concern about how big the biggest companies are getting. Are you preparing for or hearing about regulatory pressure going forward? Are people trying to get deals in now before a blue wave, or is that just basically all lip service and people are expecting things not to change too much?
I think what we've seen amongst our clients is that they're very comfortable with the forward outlook. They have plans regardless of which party obtains power. Certainly, there's been the threat of greater regulatory scrutiny, but the better companies are prepared for that. They know what their plans are going to be in the event that they get criticized with regard to their size. And at the same time, as they consider transactions, they know full well what the repercussions are going to be from the regulators and just from the market in general. So I do expect to see transactions amongst some of the larger players, but I really look at that as they're going to be acquiring some specific assets. Maybe they'll take the opportunity to divest some businesses where they can get greater value separated, but I think other sectors are going to probably be bigger players in sort of larger consolidations as well.
What's the urgency right now, Vito, on making ratios? I mean, I guess the capital ratios have been solved as a general rule, but you look at the book value disparities right now. Is there a strategic pressure into 2021 to say, let's go, we got to improve?
I think, look, the strategic pressure right now hasn't really changed. I think the better operators are still playing by the same playbook. They're trying to make sure that they're staying within the so-called ratios where they're comfortable. And if you look at whether it's the banks who are still playing by the same playbook, Or if you look at, for example, a number of clients that we're involved with are trying to make sure that they're positioned to operate in a longer period of volatility as we look forward. And so they're very concerned about, what amount of leverage do I have on my balance sheet going forward? Does it allow me to consider opportunities that come up? And does it allow me to execute against my strategic plans? One of the things this pandemic has done is that it's accelerated the progression of a number of trends. And so maybe you were looking at a specific acquisition before. You've got to move a bit quicker right now. Maybe you were going to develop a capacity internally. Now, maybe you need to acquire it because it helps you move quicker and survive in the longer term.